Hello everyone and welcome to our presentation. In Introduction to Financial Markets, our assignment is based on comparative study of three financial instruments in which we have taken equity, debt and mutual funds as our financial instruments in the year of 2022 to 2025 using real-time data. Like we can see, coming to our introduction part, in India, the financial markets play a huge role in turning household savings into meaningful investments. Most investment portfolios revolve around three pillars, in which, like, we have taken equity, debt, and mutual funds. Equity gives long-term growth, debt ensures safety and steady income, and mutual funds helps in investors to diversify, like, without needing any expert level knowledge. The objective of the project is simple: to analyze the real-time performance of TCS and 10-year GSEC and the Mirai SS large and mid-cap fund to compare their risks, returns, volatility, and liquidity, and finally to match each instrument to suitable investor personas. Next, coming to the overview of selected instruments. In firstly, coming to equity, we have taken TCS. TCS is India's leading IT company, highly liquid, fundamentally strong, and a great presentation of equity behavior. In 10-year GSEC is India's benchmark risk-free instrument, making it perfect for studying depth trends and yield movement. In Mirai, large and mid-cap fund is a popular mutual fund combining both large cap stability and mid cap growth. Together, these three gives a well-rounded comparison around asset classes. In coming to equity analysis, TCS resilience performance from post 2022 in 2020 pandemic correction. The stock dipped sharply during the COVID, but recovered quickly due to this global IT demand. There were corrections in 2022 and 2023 because of inflation, recession, and concerns and global technical somewhat slowdowns. But overall, TCS maintained a long-term upward strategy. It delivered a strong returns in 2023 and 2024 and a significant correction in 2025. A reminder that equity always carries high volatility along with a high return potential for a long duration. Coming to this is our TCS chart slide. As you can see in this chart, TCS experienced healthy growth phases followed by market-driven corrections. These ups and downs are normal for equity instruments, especially in IT sector, where global factors play a major role. But the long-term trend continues to move upward, which reinforce why equity is concerned ideal for the long-oriented investors. Next, coming to the depth analysis, 10-year GSEC. This is one of the safest financial instrument in India. It's backed up by the central government. The yield rose sharply in 2021 and 2022 because inflation was high and RBI increased interest rates. Then yield softened during 2023 and 2024 as inflation cooled, and by 2025 that was stabilized. G-Secs are excellent for conservative investors who were bothered about their uh, capital because they provide stable returns with low risk. Coming to this slide, the GSEC chart. Looking at this yield chart, the cylinder pattern becomes very clear. Yield rise with inflation and fall when monetary policy becomes supportive. And coming to mutual fund analysis, we have taken Mirai Asset Large and Mid Cap Fund. The mutual fund offers a mix of large cap stability and mid cap growth, making it one of the most balanced equity funds in India. It's now show a steady upward movement from 2022 2025 with only mild fluctuation during this market wide actions. like diversifying reduces overall risk. The returns are about like 19 point approx 19% overall 5 years. And coming to an NAV chart, so here it shows a sustained growth over the years. There are small dips, but each dip is followed by a strong recovery. You can see, thanks to diversified sector exposure and discipline management. Coming to comparative analysis, here you can see equity in TCS offers the highest returns, but also the highest volatility. Debt instrument like 10-year GSEC provides safety and predictable income with minimal risk. Mutual funds like Mirai, large and mid cap, sit in the middle, offering better returns than debt, but lower volatility than direct equity. So the right choice depends upon the entirely on the investor's risk profile. And coming to these, in this, we can know about four personas in different aspects. Coming to senior citizen, the 10-year GSEC become will be suitable because safety comes as a first priority. Middle-aged families may fund for balanced growth and stability. Aggressive persons uh, choose TCS equity since they can handle volatility. Young working professions, a mix of Mirai fund plus a small allocation in equity to learn the market gradually. Coming to conclusion, to conclude, equity, debt, and mutual funds each serve a unique purpose. Equities help build long-term wealth, debt ensures stability, and mutual funds provide a balanced route for steadily wealth creation. A smart portfolio doesn't rely on just one instrument. It blends all three based on individual financial goals. Thank you.